We're live every 3:30 p.m. Central, 4:30 p.m. Eastern, 1:30 p.m. Pacific. I am joined by the wonderful, beautiful Alexandra Merz. Welcome back.
Goes
How you
again.
doing?
Hi, Fazat. Always happy to be with you.
Oh my goodness. Always a pleasure. Very interesting topic today. Something that we've covered a long time ago loosely on this channel. But yeah, it's something that's been it's been making the waves as of late, especially if you're an investor, if you've been part of the Tesla story and other stories that are loosely related to the ESG movement. And I think that there is a lot of discovery I think that we're going to have in this episode, and something that Alexandra has been deep diving here for the last few weeks. So maybe for those that are not familiar with who you are or what ESG is or what we're going to talk about today, maybe give a brief introduction, and then we'll talk about a little thing you want to talk about first, which is related to I think that the U.S. women's swimming sport that we want to cover real quick, and then we'll really deep dive this topic. So if you don't mind, give us a little introduction.
Okay, so I'll be surprised lots of people don't know me yet with my big mouth, but there we are. So I'm Tesla Boomer Mama. I have been a Tesla investor since 2020, but professionally I've been a fund manager. So I usually had a diversified portfolio. So being all in Tesla was a big thing for me, hence all my engagements. And after being a fund manager, I was working for Moody's, the rating agencies, and I think that gave me a lot of insight, both for the credit ratings, for which we discussed a lot, but also now about ESG and rating methodology and all that, and that really made me dive into it. You'll see we're going to talk 2008, the role of the rating agencies at one moment, because I think ESG is actually derived from that period and brings lots of bad memories with it. But so very specific combination here between fund managing experience, rating experience, and being a Tesla all-in investor or nearly all-in investor. So let's discuss ESG, because I do believe it's one of the real hot topics. Very boring, but highly dangerous topic.
Highly doubt it's going to be boring because you're involved and you always make everything so awesome to listen to. Real quick, let's do a plug on this thing that you were sharing.
Yes,
so can you tell us a little bit about this?
So this year, the World University Games are again organized, with the pandemic. They've been reported and whatever. So they're now going to take place end of July. UCLA is sending a team of 3. But the U.S. Swimming Federation can't cover the costs just because it's been such a mess organizing it. So they need $20,000, and we're trying to raise $20,000. Set up a GoFundMe page, and I have this as my pinned tweet. And if everybody could just, help a little bit, that would really help out. We're still below $1,000. I can't believe we're going so slowly. So I really hope, in appreciation of what I try to bring you here, all you just chip in a couple of dollars. That would really help.
Awesome. Well, thank you for creating to bringing awareness to this. If you can spare, that would be awesome. I have a link in the comment section below, but if you could at least share it, if you have a Twitter account, that would be super helpful. Thank you all so much. Okay, here we go. What is ESG and what the hell is going on? Where should we start? There's so much to talk about.
So maybe let's start a little bit with a worldview, especially an American worldview, but it's the same in Europe. Normally, power is a matter of corporations having a certain input, governments having a certain input, and media playing their role. Now, we all know that's not happening the same way anymore. And we realize that government is not always working cleanly, media neither, and corporations neither. So when ESG was born, ESG stands for environment, social, and governance. It was actually meant as being a measure of looking at parts of corporations that are not usually in the financial reportings, right? So it would be, how much they pollute, how they apply social standards in recruiting, how their governance is managed, how well it's documented, and things like that. So this all started about 20 years ago. I still haven't found out who was the genius that put those three names together. There are a couple of people out there that claim to be it. I'm not sure that I would like to be the one carrying this on my shoulders, but anyway, there are a couple of people. And unfortunately, it has turned into something quite sanctimonious, right? You hear ESG everywhere, especially fund managers, but it's actually what I call morally bankrupt and really corrupt. The corporations, and I mean mainly the asset managers, are using the ESG capital market input to do things that the government itself couldn't regulate because it's going too far, and what the media couldn't accomplish. So they were able to kick this to certain corporations. Again, like I said, mainly asset managers who use this and use the money of everyday people in their funds to invest in ESG compliant companies, to vote the shares. I mean, we all know what happened with the, Tesla shareholder meetings and all that, so we're more familiar with this now, but to vote the shares of their passively managed funds in an ESG manner. So you have actually political activism suddenly in the asset management industry, and ESG is the horse they're riding. And so this whole game is very occult. They are coming from different sides, and this all developed at the same time. Then the Human Rights Council put in place their corporate equality index, so some are calling now already corporate equity index. So you have this whole gender topic in all that. You have what the media used for now more than a decade called stakeholder capitalism, where not only the shareholder in a company has their say, but there are different entities, notably the media or whatever, whoever thinks they have something to say now have suddenly a stakeholder opinion and make it sure they have an impact in it. And then you have a third vehicle called DEI, diversity, equity, inclusion. So you have actually four things that happen at the same time, some more pushed by the media, some more pushed by government, and ESG, who was pushed by the asset managers and who became a tool, nearly criminal racketeering tool, that is now imposed to so many companies that they can't get access to capital markets anymore. They can't sell their stock or do their financial reportings anymore without using ESG. So it has become much bigger. Just to put it in some historical context, the last 2 years, the energy crisis, due to the Biden administration, due to the Ukraine war, to many other factors, brought with it that ESG lost a little bit of its shiny object, because up to then it was mainly promoted as environmental. We're getting to that. It's actually much less than that people think, but it was marketed as the green tool. And then with energy prices skyrocketing, and the stock that was associated to it, ESG became a little bit of a less flashy object, because people said, what the heck would I invest into something that doesn't bring me the same returns? We'll get into the history in a little bit, and then I want you to, ask me any questions first. But it is really very, very concerning. And like I said, it is so boring, yet we really should look into it because it's so highly dangerous.
So the boring stuff, what's interesting about what you're describing is that the boring stuff is usually the things that are hidden in plain sight, right? Mm-hmm. It seems so again, and I want to make sure that any biases that I might have towards this or against this, I want to make sure I sideline and just kind of go off of what the research you've done and try to ask questions that are meaningful to advance the discussion, right? So the first thing that came to mind as you were describing this, and again, we talked about this loosely before, and for those that are not familiar with ESG, I'm going to try to ask questions that both try to bring people that are not familiar up to speed with where we are, and also try to dig a little bit deeper, actually quite a bit deeper than we have in the past. So to try and summarize what you said, and correct me where I'm wrong, because I could say things that are incorrect here. So sure. ESG is something that started It has weird origins. We're not really quite sure that there's some evidence of some people starting the movement or some place starting the movement, but we know that this 3-letter word, environmental, social, and governance, started about 15 to 20 years ago, if you want to call it that, a while ago. And it's gained momentum over time. And as of late, what appears to be happening is that this movement that was initially, who knows why it was created, but it had words associated to it that are meant to look after the planet and account for things that capitalistic societies usually would abuse, like environment, carbon emissions, treating people poorly, being potentially racist, right? Like things like that. It was a movement that was potentially designated to fix that. But what could be happening now is that there are very powerful entities that have money that are utilizing ESG to pick and choose who should or shouldn't get the money. Is that a good way of describing what you just said? Or what am I missing? What's the nuance I'm missing?
No, you're not missing a nuance. But the thing is, it sort of got institutionalized. What you had as a vague idea around 2005 became something, a sort of don't go to prison token after the financial crisis of 2008. So what happened in 2008? Obviously, that whole financial crisis challenged the system. And Republican, and I'm sorry, I'm getting a little bit political here, and I'm actually not taking sides, but both parties did a lot of wrong in ESG. I mean, I do believe there's currently a much more motivated progressive side to it, but the Republicans have their fair share here as well. So because both are involved, I really want to name them. So in the big financial crisis, you had Republicans lobbied and then lobbying to bail out the big banks. They could have made much more cleaning up then. There was Dodd-Frank, but I mean, it was really structured to leave everybody cozy, especially the rating agencies, by the way. That's another story, because I mean, the rating agencies were that loophole that everything had to go through for 2008 to happen. Yet other than some minor fines,
that was them sort of
happened.
They were the misrating things, right? Yeah.
They were the enabler of that whole crisis. Yet they sort of, with time, and it was the Obama administration, but it was with a lot of help from the Republicans, they let them get off the hook. So you had the financial institutions a little bit uneasy. At the same time, you probably all remember we had Occupy Wall Street, right? Occupy Wall Street was on the progressive side as well. So Occupy Wall Street actually had some points. I mean, I'm politically more center-right than that, but I have to say they had a couple of their bullet points that were really useful. So the financial institutions sort of needed a white knight on a beautiful white horse to suddenly wash themselves pure and clean again. And that was diversification, equity, and out of all that, something really weird that I would call the woke industrial complex, right? We have the military industrial complex, we have the pharma industrial complex, where we also have the woke industrial complex. And it doesn't have much to do with what Elon and lots of people call wokeness, who think this is all in the really extreme left corner. This is about using wokeness for capitalistic gains. These are people that have high salaries. These are millions of people in this ESG industry that when they sit on the train in the morning, in the commuter train, or when they participate in meetings, they look as polished as you can go. We're not in the progressive corner at all, but they use this whole agenda of diversification, equity, environment, climate, to get to something cleaner as an image, right? This is not about being clean. Remember, we discussed a couple of weeks ago how some tobacco companies have higher ESG ratings than Tesla. So this is not about the goodness. The word good is actually very complicated to explain in this whole thing, but this is not about the goodness of the company. This is who is playing the matrix how they want it to be played, who is obeying to this scheme that they've put in place, so that it becomes very traceable. I think traceability is very important to them all. So we had this big bang. We had the beginning of this woke industrial complex. And it's, I couldn't, because you said earlier, we don't really know what was happened 15, 20 years ago. I can't point to anything conspiracy theory or something like that. I can't tell you, okay, this is when that happened and these strange people were sitting around a table deciding to do that. I still don't think that happened. I think it was just a multitude of small things that happened in a very particular historic moment. And then, so that was going on 2008, I would say, to 2015. So some of these actors, like, for example, the rating agencies, they remained very quiet. They certainly didn't want to be seen as being the profiteers of a story where they could have been, capped and finished. But at the same time, BlackRock and Larry Fink has a very particular role here. And again, I don't want to finger point to him, but his movement and his idea and what he made out of BlackRock is really a major player here.
Do me a favor. Can you give a background for those who are not familiar? What is BlackRock? What's their role, if you don't mind?
So, yes, sure. BlackRock is an asset manager that's relatively new. So it's not like Vanguard, Fidelity, State Street, and all those. They play a role here as well. But BlackRock is younger. And BlackRock Larry King came up with this fabulous idea. I don't know whether it is because I really hate passive index funds, but he came up with this idea of passive index funds. So these are ETFs, low cost. People pour money in it. You can play nearly everything, just the S&P, the reverse, 1.5 times Tesla, Tesla Q, anything you want. They put up an index fund and then you jump in it. You can trade these on a daily basis. So you don't only have a net asset value, you have a stock price that moves during the day. So it is liquid like a stock, but it is an ETF. It replicates most times exactly a certain index or a certain function. And so much money got poured into that because there's always a reason, a causality to all that. What was it? The reason was that the mutual fund industry before that was much too greedy. Much too opaque, much too greedy, only published once per quarter their portfolios, lots of shenanigans going on. I was in that industry, I could talk hours about it. And so we moved from something with huge money to something very liquid, transparent, and which looked ideal and which looked as you're getting best service for little money. But like always, when you pay little money or no money, well, you are actually the product or the service, right? But that's the whole issue that I have with passive funds, and we probably get into that a little bit later. But anyway, so you had this period 2008 to 2015, everybody recovering, hoping that nobody shines too much light on them. And then you had these passive index funds slowly but surely coming to fruition, people really accepting them, using them a lot. And then you got Trump elected. So when President Trump got elected, this whole establishment, because these are these people, right? These are these people that for 7 years were trying to not shake too much, to not be, put into any lights. They just thought, oh my God, we just got out of this crisis and survived that without too much damage. Now comes this crazy man. So sorry to talk like that, but I know it's your president. But and so they felt they had to cement what they had now reconstructed. And so that's when ESG got some traction, starting to get some traction. You just had a couple of months prior to Trump's election, the Paris Accord, where these climate goals were set. And they were thinking, okay, let's use those Paris Accord to sort of restructure ESG. So Michael Bloomberg was one of the key players there, trying to make ESG the establishment answer to Trump not getting into the capital market. So this is where it gets all political again. And then big bang, Trump, I think it was in 2018, pulled out of the Paris Accord. Mm-hmm. And that was the green light for all these ESG warriors to now use ESG. That, as unconnected as it sounds, but that was so the moment where they said, okay, this can't happen again. We can't have any random president suddenly put in question, how we have now improved our image. We need to have ESG, and we need to make sure ESG gets institutionalized and everybody uses it, and there is a method to it, and everybody can trace it, and everybody can understand it and score it and whatever. So we have two time periods that are really crucial here: 2008 crisis and the 2018 pulling out of the Paris Accords. And at the same time, actually, Europe already had gone a little bit into this whole ESG topic, much easier to accept in Europe, just because the way Europe is structured and European financing is structured. But the real, big moment came when BlackRock then adopted in 2018 ESG. And it's going now so far, 5 years later. I mean, I'm just waiting for that Bitcoin ETF from BlackRock that they're supposed to come out being ESG. I mean, that would just be, the absurdity of it all finally come to a climax.
Why would that be absurd?
Well, I mean, because obviously Bitcoin is, I mean, I'm not a big fan of any crypto or Bitcoin, but the Bitcoin is something that the SEC tries to regulate now, right? And there's always a counter game between the SEC. I come back to my first words. In this whole game, we have to understand, what do corporations bring here, what does government bring here, and what does media bring here. This is the power game that's going on, and where ESG plays a role. So the government tries to make Bitcoin here in the United States as useless as possible. I think I can only express it like that. BlackRock wants this money. BlackRock wants an ETF that becomes the tool where everybody buys the ETF rather than the Bitcoin, right? Then the whole storage problem is gone, and the whole who holds it, whatever, you then hold an ETF share. But in order to make it socially acceptable, I can just see them using ESG as the tool again. I just find it's completely, paradox, and I don't understand why it's happening. But let me get back to 2018 first, because if not, we're jumping a couple of things. So 2018, Trump pulls out of the Paris Accord, and that's where two big actors started waking up. So this is CalPERS, which is the pension fund for California, and BlackRock. Why? I mean, I don't know whether there was a meeting. I can only tell you it all suddenly happened on both sides. CalPERS decided that ESG becomes a determinator in their investments. And the same actually happened with the Norwegian pension fund, which is the biggest European pension funds. But I concentrated these last couple of weeks more on America. And BlackRock suddenly started having ESG products. So that was the moment this industry built up. Now, that's only 5 years ago, right? And I don't know whether you heard anything about ESG before 2018. I didn't. I mean, I was out of the financial markets from 2007 to 2018, so I never looked into all that. But then suddenly it came from all sides. And when something comes from all sides, you always have to wonder, what happened? And it actually came from all sides. Also now suddenly by the regulators. So you had suddenly the World Economic Forum, who put in place what they call their stakeholder capitalism metrics, something that very close to the same stuff. You then had in 2021, the government starting to really play a role here, because the US Department of Labor said for 401ks and pension funds, ESG should become a measure. They're still not there, but there we are. You had the setup at one of those COP26 meetings, I think it was, of something that is called the ISSB. And that's where I really hope I don't lose people now, because it gets very dry, but very consequential. So ISSB is the International Sustainability Standards Board, and it is organized by an international association trust called IFRS. So IFRS is something that is in charge of setting the standards for financial reportings. So when you see the quarterly or annual reports of Tesla, they are in a certain format, and you can compare them to GM's, or you can compare them to Ford's. Why? Because they're standards, right? And so the governments decided, I think 26 of them, to mission IFRS to now come up with ESG reporting measures in financial reporting. This sounds like, okay, this is bureaucrats, this is not a lot. No, this is actually the climax. I'm sorry, climax is my word today. This is the moment where this all comes finally to fruition. If they manage, and they're in a very good position to do so, if they manage to oblige all companies worldwide that want to play on the stock exchange to report ESG in the standardized manner, because that's what they want to do, then we have lost. Because that means that every company has to be pressed in that same matrix, meaning you now have to have a certain diverse workforce, or you now have to have a certain handbook saying certain things, or you now have to report your, and again, I mean, I'm all for the climate. That's not my point. My point is that there will be a central body determining how you have to run your business and how you have to fill this out. And then you will have auditors, because everything that is in a financial report has to go through the Pricewaterhousecoopers and all these of these worlds, right? And so you then suddenly have these auditors telling you how you have to recruit, how you have to ask your suppliers to do certain things. Just everything becomes more sclerosed, more managed from the top, more managed from an entity sitting somewhere in the world, and we'll probably get later on into the details of this, imposing their way of looking at it. So maybe you want to interrupt me here, because I'm going on and on.
I have a lot. I mean, I have a lot of questions are coming up. So is currently, so when you think ESG, like an ESG score, like a standard S&P Global, their one arm that rates Philip Morris and Tesla and everything, they have an ESG score. So what it sounds like is that score. So it sounds like it's not standardized today. Anybody who's tracking ESG, they're doing it their way. And then there is a body, ISBB, what's it called? ISBB?
ISSB, International Sustainability Standards Body, yeah.
They want to make it so that it's a uniform way of scoring everything. So like everybody's using the same scale, the same sort of points, how they transition over time. And they also want to force every company, every public company, it sounds like, at least to start, but maybe every company, to have to report based on these metrics, which which sounds like could be a problem for companies to actually operate as a company, and it could be rigged, or it could be run in a way that doesn't actually track those scores, that it's just something that's abstract and hard to quantify, and it's just kind of, it becomes weird. Is that a fair way of simplifying that?
It becomes, yeah, it does. And especially it becomes something where recruitments or decision making or suppliers or your whole product and service line doesn't depend on, I'm using the word capitalistic decisions, meaning the merit of the person you decide to hire, the merit of the product you decide or service you decide to use, but suddenly it has to have all these different byproducts, right? So you have your diversity score for recruiting, or you have your emission score for how much your supplier has to go. It trickles down into the whole economy to micromanage companies,
every corporation,
to then pretend this is all for the good. Now, again, the question of good is actually a very, very bizarre and philosophical question, right? Something may be good for you and I don't find it good, or vice versa. But you take that away from the corporation to decide what they think is good for them. You actually try now that this board, and you may want to pull those 3 slides up, that this board is the one deciding what data you should report, so that it then becomes comparable. Yeah, exactly. So this IFRS, this financial reporting board, is this trust, whatever you want to call it. And I'm sorry, this is so small, but you have it also in my highlighted tweets. These were the 2021 donors, because as it is a trust, it lives on donors. And when you go through the list of donors, here, for example, the yellow ones are all German companies. Europe is actually one of the biggest donors of this IFRS, much bigger than America. So you suddenly have this body where you have more than half of the donors being Europeans, regulating how every company in the world should report. I mean, it gives me the shakes, right? I don't want anybody telling companies I invest in or companies I set up myself how we have to score our employees, how we have to score our suppliers. I do believe there is merit, and I'm not saying I like people that are, doing dirty tricks or whatever, but I just don't want micromanagement at this level. So it is put in place, and I think that's really my big problem. It is put in place to filter in certain parameters, certain political ideas. And I'm not saying it's bad, because at the moment it's rather progressive. Yes, at the moment it's rather progressive, but it could be completely different in 2 or 3 years, and I wouldn't like it either. I just don't want all these political shenanigans in there. We're running companies, we're trying to do our very best. If you look at Tesla and the impact report, they're doing fabulous things, but about 3/4 of that impact report would never show in these ESG scores and ratings.
Why wouldn't 3/4 of that not show? And I think that kind of highlights some of the weaknesses around this scoring system,
exactly.
right? So
well, first of all, the donors obviously are not donating just because they're nice. They should donate. We'll talk about it, to my swimmers, right? If they want to really donate something. But there we go. So they are donating because they want to have influence on it. And so when a BMW or Mercedes donates, they want to make sure they get heard when it comes to the point how automobile companies should report their ESG stuff, right? So there is a causality at all that. And you can't just say they're doing it for the good. We all want common standards. I'm not even sure we want common standards. But even if we would, I certainly wouldn't want a trust deciding on these common standards where the donors are so biased in there. They're in there for a reason.
Can I ask you a question? How come? Well, I guess what is confusing to me is that it sounds like there is a lot of merit as to why this is not a smart thing to do. That you allow a governing body, one singular governing body that's global, to dictate how essentially every public company in the world needs to operate from an environmental, social, and governance aspect, which will literally dictate everything they do as a company. Everything's micromanaged, to your point. But then how come there are all these companies that are there are companies out there that are waving this ESG flag very, very proudly? Why are they so pro this if the outcome is going to be so detrimental to how they run a business? Can you help me understand this?
I love you, because you asked the right question at the right moment. Thank you, Farzad. So why do they like it? First of all, most people who like it need money from the capital markets. And currently, it is still much easier to get money if you have the ESG flag on than not. The green bonds are much easier to raise money than not. So what does this mean?
One real quick thing. Can you just explain capital market? What does that mean for the viewer?
Sure. Yeah. So let's say GM needs money. Happens to them from time to time. So they need to issue debt. But the most easy one probably is their matching of their financing arm. Let's say GM would only do 5-year loans to the GM car buyers. Then they have to issue debt for the 5 years, right? I mean, if they're trying to match the maturity. And so the 5-year debt, meaning the bond, the obligation that's out there, somebody has to buy them. And if you put the ESG rating on it, well, you find more buyers. Why do you find more buyers? Because there are asset managers who are sitting on all these funds, the mutual funds, the ETFs, that need to invest. And now there's suddenly a GM green bond to be acquired, and obviously they buy it. And so that's how GM gets the money to finance their cars. So you have a lot of green bonds. It's less a question of stock, because stock is obviously traded on the stock market every day. That's not the impact. It's really on fixed and variable rate bonds where you can find it. And so but you also have it for smaller companies now who just get a credit line from a bank. the banks can impose them that they need an ESG score to get their credit line. While in the good old days, they would go to their bank and say, look, I need 200,000 for my cash flow for the next 6 months. Now it is, well, you get the 200,000 if you have an ESG score.
Whoa.
So most of these
this
companies—
is happening today?
Oh yeah, this is happening for the last 5 years. Yes, that's how they impose it. This is how they impose it. This has become the biggest cancer in financing, in corporate financing. Yes.
Wow. Sorry,
Yeah,
keep
that's
going.
how
I wanted to make sure that was clear. Yeah.
Sure,
Okay.
sure. This is what
Okay.
what happens. So the question then is, how do they get this score? Who scores them? And with which model? Now, we are always talking about S&P Global, because when you are on Wall Street, when you're trading stock, S&P and Moody's are still the big names, right? But actually in this ESG world, there are now 5, 6 other players. MSCI is one, there was the Bloomberg Initiative, and there are a couple others, Sustainalytics, EcoVadis, there's Bloomberg, there's CDP.
Shall I go ahead and pull up that chart?
Yes, please,
Okay.
because this is very interesting. Hope it gets big enough so people can see it. So there is now a company called ERM, which rates the different ESG scoring providers, right? ESG rating scorings, whatever it is. I mean, it's all done to be gamed anyway. And let me just explain one thing. When they did this survey, ERM, they sent out thousands of corporations, meaning the GMs of this world that need these ESG ratings to issue their bonds, and also thousands of asset managers asking, how do you use them and which of the ESG providers do you prefer? Okay, so let me first say one thing. Of the companies that need an ESG rating, more than half said that they're checking out 6 or more of the providers for the ratings, meaning they pay 6 companies to do it so that they can cherry pick the one that gives them the highest score. Did you hear that? And I mean it. I mean, this is crazy. This is in this web. I know. I mean, I don't have much time, but when I dig into ESG, it's actually becoming fun, because you're just there. You just think this is not possible. We're in such a bizarre world. This can't be possible. So
Real
anyway,
quick,
so yeah, go ahead.
Can I just so everybody's clear on what we're looking at together? So this is a ranking of the quality and usefulness of ESG scores that are provided by each one of these ESG score providers from both investors and corporations, right? And so like this one says, we did an investor survey, and based on our scores, ISS ESG gives the best quality of ESG rankings, and CDP gives the best usefulness of ESG rankings. And when we do the same study for corporations, this is their results. Who need the money? This is their results.
Exactly.
Okay.
So let me explain this, because this is absolutely hilarious. Okay. So the first point is, when you're a company, you have to run to 6 of them, pay 6 of them to run your company results, see whatever comes out of, and obviously you choose where you are looking the best, and the other 5 you shovel under the carpet, right? That's the first thing. The second thing is, when they do this survey, and I mean that they publish this boggles my mind, but so they take it from the 2 stances. Top 2 boxes is, you're an asset manager, you now want to use these scores. Which of the providers do you look at more, and which one do you find of high quality, and which one are really useful? So obviously the 2 top in both categories are ISS ESG and CDP. You will never hear of them again, because nobody uses them other than this institutional little world. And then the bottom 2 boxes is the same question to the companies that need ratings. And yes, CDP is there, but you also see ISS ESG is all at the bottom. So while ISS ESG is obviously doing the best job there, the companies don't want them because they get the worst scores. So they don't use them. I mean, this is absolutely crazy. Just this table shows what a shenanigan it is. And so why did I want to show this? I want to show you that because I just want to make sure everybody understands, as whenever, and I did ratings myself, but whenever you do ratings, you do scoring models. And as soon as you do scoring models, the whole game can be fooled, right? You just game the whole system, because as soon as you have a scoring model, you then do advisory to your clients on how you do that scoring model, which you bill triple of what you actually bill the score for, so that they learn how they can then fulfill their scoring model. And then once you have it, well, then you sell the rating afterwards. So this is a whole gravy train. This is a whole gravy train. Some of them obviously do a better job than others. It may be interesting for some of you to see those names. I don't think that they will matter a lot, because what really happened now is they've gone silent. They have gone silent because we're making enough noise. I mean, not only you and me, you typical, but there are some politicals out there. And actually, I despise that the right wing has taken this subject on, but on the other hand, somebody has to do it, because they are trying to make it political. But as I said earlier, they made big mistakes in this whole thing as well, right? They are the groundbreaker in 2008 and what followed of this whole subject actually rising, and this woke industrial complex becoming what it is. But we have more people talking about it, so they've gone more silent. But go on LinkedIn, put in the search engine ESG, and you will see the float of thousands of jobs in this industry, of people already in it and also job offers in there. This is a huge industry. This gravy train becomes bigger and bigger. Yes, more silent, but also by governmental initiatives, more rigid, more embedded into the way we do business. And I just feel we can't get out of it. Now, let me probably add a little bit something about Tesla, because I haven't talked really about Tesla. So Tesla in some of those models scores very well, in some less, obviously S&P being the worst of it. At least they've put them back into their index. That's a whole other story. But the thing is, Tesla typically has the attitude, don't give a whatever. So the I didn't say it.
I was
You're
about
demonetized now.
I'm like, you know what? If kids are watching, this is good education. So I won't
exactly. You need to know all letters: A, B, C, D, E, F, L, everything. So Tesla doesn't care, but we're at a point where Tesla will have to care, because their auditors, Pricewaterhousecoopers, will oblige them if this whole ISSB, IFRS stuff comes through. So while Tesla, I'm sure, will maintain the impact report the way they do, when it comes to financial reporting, they will have to hire specific people who trace these stupid indices the way this board thinks they should be done, and will have to comply. And it's crazy to think how much wasted time and energy will go into this.
And so PricewaterhouseCoopers would the auditing firm that essentially allows Tesla to report publicly, right? Because every public company has to have an auditing firm, right, attached to them. So you're saying they would have to force Tesla to do it because they are on board on this. And I'm assuming it's because they have many companies that they audit for that are pro ESG, and that's what's basically in their best interest. Okay. Yeah, it's all about the money. Okay.
It's all about the money. Yeah. It's all about the money. It will be a whole new branch for all these auditing firms. If you look on those, we don't need to pull them up again, but for those who have seen it, if you look into those 3 pages, the auditors are among the biggest donors to this IFRS. So for them, this is Christmas and Easter and everything else at the same time. I think it's on the 3rd one. These are all the German companies. I mean, it breaks my German little heart. Here it is, I think, on the bottom. It's on the last one. I think it's on the bottom. No, look at the bottom. Deloitte. Oh. I mean, I can't read it really here. Ernst and Young.
Yeah. Deloitte, Ernst and Young. Yep. Yeah. Okay. Wow. That's wild to me. So it is. I mean, I just have so many questions. So I know, and
I just want to. Yeah, go with your question, but I just want to, sometimes I think I'm so confusing when I talk about all this, but it comes from all sides, right? So please do ask all the questions.
It's not confusing. I think the reason why this is a topic that doesn't get covered often is because it's so complex and so vague, and it is, this is my opinion. This is why I think it's complex, or that's what's not reported on. It's because it's a web of information in a field that very few people naturally understand, which is capital markets and investing. There's very few people, like, for example, when the financial crisis happened, How many people knew it was happening? No one. Why? Because it was complex. Because it was a bunch of stuff that was based from the ratings agencies mislabeling things, and you had a bunch of derivative trading in the background and stuff like that. It was just a mess. And then years after, The Big Short came out, which was the movie, and then people are like, "Oh wow, that's what actually happened." And you had news reports afterwards. So to me, it's just very reminiscent to me of that sort of story. Is that it's complex. It's not for the everyday person to sit down and it's. In my head, what I'm trying to do is how can I make a 15 to 20 minute long video based on what you're describing so that all the variables are easy to understand, and I have no idea how to do that because there's so many components. But here's the big thing that's coming to light for me. The eye-opening thing for me is that there's multiple firms that report ESG. There are multiple firms that will give ESG scores. So that already. So when I think of a score, I'm a data guy. I'm my background is business intelligence, data analytics, right? And mathematics. I'm a math major. So when I think about numbers, I'm like, okay, there's got to be a way to quantify something. This is the number. This is what math says. Math is a language of the universe. It doesn't like to lie because it physically can't. You can use statistics to make it look weird, right? But numbers typically are used to describe something accurately. When you have 5 or 6 different firms that are using numbers to describe something, and there is a vast difference in how people interpret those numbers, that to me says that it's not something that should be quantified. How many times have you worked at a company where somebody will give you a report that just is not really what it's describing? It's just a number that's trying to make it look good. How many companies, when in the quarterly earnings, try to fudge the numbers here and there to try to make them look good, right? So it's akin to that, and I think this is why it's a weird story to track. It's because there's many people that are reporting this in a different manner. And then on top of that, you have a body and ISSB and others that are trying to get everyone to come on the same number, essentially, right? They want to say, this is how we're going to do it. But if you have 5 parties and 6 parties they're already disagreeing in how it should be measured, what is a standardization going to do? It's just going to take the average of the worst numbers, and then you have a crappy number out there that's trying to judge people. And then you're saying, okay, if you want money as a business, you have to abide to this random number, right? That's what I'm hearing.
Mad, right? Mad. Now, let me just clarify. So ISSB doesn't do the calculation. They still want that to leave at the 6 or 10 or 15 providers by then it will have, right? ISSB wants to do the base reporting of the raw data in a certain standardized manner. But that's actually much more dangerous. I mean, I don't like any of this from A to Z. Everything I talk today, I despise, but with all my heart. But what I really fear the most is this ISSB initiative. And there's an SEC one as well, but the SEC is never doing anything. So I don't worry about that much as much. But the ISSB says, okay, the raw data that we need has to be for this criteria, this calculation. And that's why I'm so nervous about these donors. Because, it all sounds as if it's just an objective number, but it's not. The way you calculate, for example, your gender score. So do you get goodie points for women? Do you get goodie points for whatever else, sexual affiliation? I mean, I have no opinion about that, but I don't want anybody else to have an opinion on that, right? I don't want anybody to tell me, and Larry Fink is actually on tape saying, no, we want to impose to the companies BlackRock invests having a high non-male white employment. I'm like, excuse me? Where's merit in this whole story?
Can I highlight where
these things drive me crazy?
And so can I highlight where this could be problematic, and then tell me if I'm wrong? In fields that are naturally heavily male-dominated, because of interest or whatever it may be, if you're forcing a company to abide by a score that forces them to hire a higher proportion of women versus the male, it doesn't necessarily say that a woman can't do the job. But if there is if there's just men out there for you to hire, doesn't that imply that the company is going to end up with people that aren't naturally inclined to be in that environment. Is that a fair way of
I always say, and I mean, my husband is always telling me I'm wrong. I said, our brain is the same. I mean, he says, no, you can see female brains are smaller. I doubt that, but never mind. My attitude and the way I educated my 5 children is, if you work hard, if you deserve something, if you have the merit of, having put the work into it, well, you should be chosen to do that because you are the best person for it. I don't care how tall or short or slim and not so slim, hair color, gender, sexual affiliation. None of that matters to me if you're the right person for the job. Well, long gone the times. And I mean, I know that by talking about diversity subject, this is probably the most controversial because people have an opinion about that. But sure. I'm absolutely against women positive discrimination ratios, right? I saw that in Europe where they suddenly had to have a certain quota of women on boards. I mean, it's ridiculous. It's absolutely ridiculous. But the reporting today is already in place. How many women are on your board? How many non-whites are on your board? This has already made its way through, and so I just want to warn. Again, this is a completely boring subject. I know that we all just wish it would go away. It won't go away. It's coming from everywhere. It was corporations to whitewash their sins. It was political shenanigans, but now the governments have put it in place and are really sclerosing it into our way of capitalism. And it's also, I actually think it's something of national security level. Let me go there. I do believe by imposing this, and you know how it is in America and in Europe, once it is imposed, then everybody has to do it. First of all, we're giving away our own maneuvering. We're suddenly doing things for scoring reasons rather than for the business reasons. The second point is we have accepted that somebody has laid out an ideal case and we try to move ahead towards this ideal case. What's that? Who can decide that? Do you think somebody is smarter than Elon? Do you think that somebody knows on those round tables how to run a business? And this may be right for Tesla, and this may be right tomorrow for GM, but this is crazy to think. The third thing is, this is a gravy train that costs us a lot of money, that costs us consumers in the end a lot of money, because fair enough, initially the companies will pay it, but the product will become more expensive because of all these reporting that has to be installed and whatever. But it goes really further, that the whole setup of publishing data that you didn't need prior makes companies vulnerable. Now you have, like I said, currently you have 6, 7 companies, maybe 15. Now let's say one is concentrating on the diversity score. Then suddenly you have journalists going on. How about this company is not having good enough in diversity? So then you have to defend yourself. So it's a whole circle of consequences that comes from it. And I do believe by obliging companies to run this, and there's been surveys out there, I checked it again yesterday, 90% of US companies of a certain size that are in the Russell 3000 know they will have to comply to ESG scores, 90. Okay, so wow. We are there. So by doing that, we're actually giving data out that we didn't want to give out. First of all, we may comply to it, but even if we don't comply to it, now suddenly our competitors have this data, and we don't know whether competing companies in Asia or wherever don't do it or will do it. We will do it because we're always running first in this crap. So the sorry about the crap. I shouldn't be so judgmental. But we're getting into something where we're actually harming our own economy. We're harming our national security. We're giving away stuff that we shouldn't do. We shouldn't do it initially, but then once we do it, we are actually laying naked. I mean, how dumb is that? What for? Well, for some scoring model and some people to be able to now asset allocate? Because that's another thing. Oh, let me go there, please. 2 seconds.
Yeah, please.
Why do I despise ratings so much? Because for me, it is the ideal, and I'm talking about credit ratings as much as ESG scores and ratings. It is the ideal tool for idiots. If you're a financial analyst, or if you want to, I mean, how much work do you, Farzad, do on Tesla, right? I'm sure you know so much more than all these financial analysts at Moody's or on Wall Street or whatever. Why?
It would be a shame if that's the case.
So ratings and scores are for two reasons: making lazy people just buy the research, not the research, the 3 letters or the 5 stars or the 84 number, right? Hiding behind something quasi-official. Oh, they must have done the work, so I don't need to do it. Here it says 84, or here it says 36. This is what I hate so much. So on one side, they tell us, oh, you have to be better in diversity, you have to be better in this, you have to be better in that. But on the other side, we give you a score and you don't need to do the homework anymore. So first, they micromanage the company, but then they also micromanage the idiots of this world. Sorry to my words. Please stay lazy because we did the work for you. You just now swallow what we just told you. And I don't like it. I just don't like it.
Yeah. I wonder if this whole thing, do you think this whole movement is based on good intentions? You know, like for example, no one, I would say positively 99.9% of the world's population is disgusted at the thought of having a company that would skip over a person specifically because of their race or where they come from, instead of their merit. Like, I think all of us can agree that that's absolutely insane and that shouldn't exist in the world. And humans are, unfortunately, there are situations where that could arise. So I totally get it. I totally get why people would be so like, how could you hate a movement that's trying to remove that from the world, right? So that's what's going through my mind. And I'm wondering, do you think there is that type of mentality that is present at these levels of decision making? Like, that's another thing that's weird to me, is that there are decision makers in places that decide these things that impact literally everybody. Like, blows my mind, but that's just the society that we live in. Do you think these folks are truly trying their best to remove bad behavior out of the system, and instead, maybe not knowingly, or perhaps they are not recognizing history, that if you allow a institution that has a lot of influence to, you give it enough time and enough people are involved, it will always trend towards corruption, right? How much do you think that these folks are doing they want to do the right thing, and they're not recognizing how this could potentially be a lot worse than good? Does that make any sense? I would love to hear your thoughts on that.
I hear where you're coming from. I mean, I wish it would be that case, and I can't vouch for it, but I doubt it very much. When I see Larry Fink, I've seen actually 3 interviews with him. One was at the Clinton Foundation, I think it was about 2018-19. One was more recent, and the other one was at one of those Bloomberg forums. And in all 3, he was very clear that they want to impose certain behaviors of recruitment, certain behaviors of reporting, certain behaviors of just their criteria. So I don't want to say Larry Fink is the only person here, but he certainly is a key person. And everybody is envious of how BlackRock, has so much asset under management, has so much influence. He's obviously a political actor. He is one of the 2028 hopefuls of the Democratic Party. So there are things happening in there that not very clear. The other thing that is happening is actually they're playing geopolitics with this. So you have ESG funds at BlackRock and somewhere else, where they're imposing the being clean in all sorts, not only climate, on the US and European companies, but not on the Chinese. So they would invest in those funds in the Chinese companies, although they don't have the whole ESG background, but they will not do the same with US or European companies, which gives obviously a Chinese company a horrendous advantage.
Can I just...
Don't tell me BYD now. Go ahead.
I want to make sure I heard this correctly. So these institutions that can influence and do influence how a company can have access to money, they pick and choose currently which companies get that ESG standard depending on the country that they come from. Did I say that correct?
That is true. Okay. And that comes on both sides, both for those that want to access credit, meaning bonds or corporate credit at the bank, but also asset managers that are sitting on millions and trillions and need to invest into something. They say to the US and European companies, oh, we will invest our money in your company. Purchase your stock, purchase your bonds only if you have a good ESG rating. Well, they wouldn't do that with Chinese or other countries. So you have a certain favoritism. Also, ESG actually goes on a completely other level, which I don't want to go into, but there's a very good all-in podcast on it where Shamat and his friends discuss how ESG actually is detrimental because they actually try to micromanage countries, right? How much agriculture, what type of agriculture, and whatever. And then if it doesn't happen, then the whole ESG thing goes down. So that's another point. Another point that I always point out when I talk about ESG. So ESG is hostile to nuclear. I mean, we know from Elon, he's not, right? I'm not either. I've lived in France long enough. One thing about nuclear is if it's rightly managed, it's the cheapest way of energy and has a lot of advantages. So it is really strange how they are so much for clean stuff, but they're against nuclear. So you see that there's stuff in their whole ESG appraisal that goes beyond being good and scoring. Again, my definition of good is different than yours, but let's put that aside. But it goes beyond that because then suddenly political stuff comes in there. Why does ESG not like nuclear? Why do they even have an opinion on it? Because they like tobacco, right? How come tobacco can be good, but nuclear is not? No idea. And so this whole steering of where the money goes is really what is important. Now, sorry, I probably repeat myself, but the important thing is you have companies that can't get financing, yet they need it. So they need this ESG stuff and now suddenly have to obey it and fill out these questionnaires, pay 6 companies to evaluate them, pick the best one, pay them more to get it to be published, and then they have it, and then they suddenly get money that they should have gotten in the first place, but there we go, gravy train. But then you also have the asset manager sitting on millions and trillions, money in pension funds, in 401ks, in ETFs, saying, okay, now I need to invest this, but I only invest it if you, the company that issues the stock or the bond, have a high ESG score. So it really is a perfect circle how they all oblige the actors to suddenly obey to this. And this racketeering, that's what's so important for me. This is like a mob. It's the same people turning around, opening their pockets on all sides to be able to do that. And it's not fairly done. It's not done in the same way geopolitically. It's not done in the same way, depending on, size, whatever. It's not done fairly to Tesla. But yeah, it's just not fair.
It's just so fascinating that this is it doesn't seem like there is a way to pinpoint. We know it's money motivated. Like, we know that for sure, right? Yeah. Okay, so let me ask you this question. If the public, Western society, global population, whatever, if a significant percentage of the public starts moving towards, let's just say this happens, right? They're like, okay, if you're a company that's pro ESG, I'm not going to do business with you anymore.
Well, that happens at the moment. That happens with the Republican governors. The Republican governors of a couple of U.S. states have said, our pension funds are not going to be ESG, so we're pulling them away. And there are a couple of initiatives. For example...
Can I just finish my thought real quick?
Yeah, sure.
Yeah, real quick. So what I'm going with this is like, if a significant number of companies would do this, do you foresee this movement stopping because it would no longer be profitable to have a business that is ESG friendly? Does that make any sense? Like, if that were to happen? Yeah.
It does. But every month that goes by, I feel this could become the battle of the titans, right? I also think the 2024 election in America is crucial to what happens here. So why? Because with the current administration, nothing will happen. For me, the solution comes from a grassroots movement. We're talking about it now for an hour. I hope so many other people are talking about it. But it will also come from a different government, a different attorney general, congressional hearings, and an antitrust action by the Department of Justice. The thing is, as I explained earlier, this is a small circle of players. this ISSB, these big asset managers, these banks that oblige ESG.
How many people? Like, if you were to guess, how many people are involved?
Key people?
Yeah.
Less than 200 key people, but then it spreads out to 10,000s, 20,000s of ESG soldiers now walking in their gear in their war, right? But the key people, probably not even 200. And so there are a couple of things. I think these 200 deserve an antitrust action. Because it is a cartel. It is the way it is done. I mean, I try to explain it, how they try to really squeeze everybody into the same behavior. And then the other thing is, if really we want to stick with this, the absolute minimum has to be that scores are not a commingling of ESG, but keep it E, keep it S, keep it G. If really, I mean, that's the absolute minimum that has to happen. The big thing would be to just blow it all up and do an antitrust action and just make sure that this is not a thing anymore, which might happen. And again, I want to come back to that, that I don't like this to be political, but in the end, it will have to end at the Department of Justice. So we do need Congress, and we need an understanding of it, and we need people to be motivated by it. I mean, the SEC is doing nothing. The SEC started a year ago some rules because they found some Goldman Sachs funds which just were ridiculously using this to pander their interest. They got a little fine of 3 times nothing. Couldn't go to Starbucks that day, but that was that. And wanted to have a law change. It's been 13 months. Nothing happened. The SEC was missioned by Dodd-Frank in 2010 to get rid of the rating agency's influence, where 13 years later, there's still nothing happened. So don't expect anything to happen from the administrations themselves. It has to be political. It has to be the Congress. It has to be the Attorney General that is missioned. It scares me. I mean, not to the point that I don't sleep because of ESG, but the thing is, every 12 months I look into it, it just gets worse. It gets worse. Why are we talking about it this time? Because we came to that ridiculous S&P rating of Philip Morris compared to Tesla, right? We were all laughing again, couple of newspaper articles, and that's that. But we'll fall asleep again, and in 12 months there will be something else. And by that time, they've just spread even more. All their initiatives just clam into it. It is what it is.
I wanted to pull up that picture just for those people that are not familiar with what we're talking about. So the Philip Morris Tesla ESG score. Farzam is by Twitter. I'll see if I can find it on mine. If not, I'll do yours. Yeah, so I don't have it up because I'm an idiot. But basically, the Philip Morris is a tobacco company that were rated by S&P Global, their financial arm. They gave them an ESG score, and Philip Morris had an 84, I think it was. And then Tesla, the maker of electric vehicles, solar energy and stuff, their score was 37, I believe. Yeah. So a company that's responsible for a portion of 500,000 deaths a year just in the United States from tobacco-related illness has a better score for the environment, social, and governance policies than an electric vehicle maker.
Yeah, and again, that just shows how you can score how you can game the scoring model, because nobody asked whether it's good to produce cigarettes, right? Nobody asked whether it's good to produce electric vehicles. That's not the question at all. Do you have your micro little questions and answers right to score? Maybe you want to show that S&P rating matrix that I sent to you, where I mean, it's absolutely ridiculous. We don't have to go into it in detail, but they have. No, it's not that
this one.
It's this one is the assets under management at BlackRock. But go into the one that says S&P that you saved to make it. The first one you saved to make it bigger.
The first one. Got it. There we go. Producer wife, where are you?
Exactly.
I need your help today.
Where are you?
See what happens when we don't have her?
So you see what it is. This is the 2022 weights of the S&P automobile ESG scores. I mean, it doesn't matter, right? But it's just, you see what they do. They give these certain weights, and then the client understands what they want. and they work on the solution to get a certain score. And I'm sure Philip Morris did this perfectly well, right? And had all the biodiversity scores. I mean, their tobacco must be biodiverse, don't you think so? Beautiful climate strategy, low carbon strategy. Who cares that they're making cigarettes, right? That there is no question that hurts them, because there's only a scoring model where they are, if they pay and if they get the right advisory, they will be able to do very well.
Okay, so this is very eye-opening. So for those that are not familiar with what we're showing here, so this is S&P Global's weighting. Is this what this is?
This is S&P for the automobile ESG ratings, yes.
For the automobile ESG, yeah. So this is if you're automobile ESG. So these numbers here are basically how much the corporate governance weighs towards your score. So it's 9 points. Materiality is 2 points. Business ethics is 6 points, which is an interesting thing to quantify. Okay. Policy influence is once. I don't know how you do that.
Don't you love innovation management? I love innovation management.
But this is what I'm talking about. Is like product stewardship. How do you quantify that?
You don't, but this is made to be able to be gamed. The whole goal is not truth finding. The whole goal is allowing your clients to pay a lot of money to explain them, to game it.
And I bet you a lot of money, $20, that these metrics are developed by someone fresh out of college.
Oh, sure.
How much you want to bet? It's an intern that came up with a spreadsheet that says, this is how you calculate product stewardship. Okay, great. Every company, you're now using this metric that's probably 100% wrong. No hate on the intern, but like they have an impossible mission, because like, what does this even mean? You know, it's so weird to me. So human rights, human capital development, talent attraction and retention.
Yeah, but wait. The right diversity of talent attraction and retention.
The human capital the right diversity of talent attraction and retention. Right, right, exactly.
And philanthropy.
Fascinating
I love
stuff
as well. Yeah, I know.
It's so weird to me. So then all these points, right? They come up with a score. So human rights and human capital development, you get a score, and that adds to your ESG score. And then isn't there something about that if the company doesn't self-report, they try to make it up? Right?
Exactly. So there are two levels to it. Input is either what they find in public documentation, or the company can participate. That part is free. Of course, free for sure. I'm super free. So Tesla doesn't deliver any data, so that's already a minus there. And then the output part is, so you got to the score, and then comes an overlay of their qualitative assessment whether you are acting in the stakeholder interest, not in the shareholder, you idiot who put money in the company, but in the stakeholders, meaning the media and the environment and people circulating around this company, what they think of the company. So actually it is a media analysis. And then this is what it is again. I'm coming back to my first point. This is a power game between corporations, government, and media. And with ESG, they're all three together in the same bed.
Wow. So it's literally just an attempt. It's their attempt. It's just. I'm just picturing like, and I'm sorry for this visual, but I mean I don't know why I'm apologizing. I'm picturing just like 10 people that I don't know, have a lot of money that they can sort of decide who gets the money, and then they're literally coming up with arbitrary data points, it seems like, to try and figure out who's deserving of access to that money as a company.
Yeah, they are micromanaging. They are micromanaging how you run your business, and then they're micromanaging whether you're worthy of having access to more money. It is the mob. This is a cartel. I tell you, and it is really dangerous. It is dangerous to our economy, and it costs us consumer a lot of money, because the companies have to comply to that, spend a lot of money to it, figure it out, and there we go. And us as Tesla investors, our strength And that's one of the reasons why I moved away from thinking we should do a share buyback so soon. Our strength is that Tesla doesn't need more money, right? Because as soon as you slip into I need more money, well, either you're important enough that they don't dare impose you the ESG rules, which could be the case because given Elon's way of making us all participate in those decisions, maybe they wouldn't dare. But other than that, Tesla would have to improve their ESG score to get cheap financing. It's crazy.
So one of the ways to get around this is could this spur a huge, like a lot of momentum in businesses that just operate so lean and so profitably that they won't need to tap these capital markets because they don't want to abide?
But there are so few, Farzad.
Remember, but what if it spurs more of them?
Right? It should, but the problem is obviously these days are not easy for them. But it is true. It is true that by having less debt, you dissociate yourself from them. That's for sure. Debt is actually the weak point of the companies, and that's where they get them.
Wow. So this now the picture. So if you want debt, so this is maybe in 20 years' time if this movement continues. If you want debt, you have to play by the ESG rules. If you're especially if you're large.
Years. Now. This is happening now.
Yeah.
It's not in 20 years. This is
so
happening
today,
now.
If you want debt as a corporation, and who knows, maybe this extends in the long term to individuals, right? Yeah. As a person, you will have to play by the rules that ESG sets, which will measure which we just went through, some dubious qualifiers that are tough to quantify. I would say that's probably a very good way of me, very nice way of me saying it.
You're much more polite than me.
Yeah, I'm trying to be impartial, but it's very difficult. I'm going to be honest. Like my BS radar is going off like crazy, right? And I can't help it. Sorry. So you're going to have to play by the rules. But if you don't want debt, if you can operate in a way that you can tap a capital market or raise money or have access to money that doesn't potentially abide to ESG rules, could you be a capital market, or can you be a player in the capital markets, or somebody that just offers you the ability to raise money without ESG? Could capitalism give birth to those type of institutions?
Could, yeah, but at the moment you have the most influential players against you. So again, if you don't need that, you can probably spit on them, which I hope Elon does. And he does regularly. I mean, he called them the devil. He called them the worst, whatever. I mean,
not kind words.
No, and he's right. He's right. And he's in a strong enough position with all his companies to not need them. And he is in a strong enough position as the owner of Twitter to ensure that he has the faculty to speak out, right? I mean, do you see any other CEO or president talk out about ESG? They don't. Why? They are afraid. I say the sentence again, 90% of companies are either ESG rated and deliver data or are planning to do it in the next 12 to 24 months. This has taken over.
Wow. Could Twitter, the Twitter financial services that Elon has talked about, like part of X, how long-term, he said something about, I think it was during the Zuby interview, or I forget who it was. He wants a significant percentage of the world's financial transactions to happen on Twitter at some point. Mm-hmm. Could this give birth to, I don't know, I'm just spitballing here, Twitter financial services that will allow huge companies or maybe medium-sized companies to have access to capital that are not tied to ESG? Could this be part of that play?
Well, I mean, ESG currently has no influence on retail customers, right? I understood Elon wanting X being the financial exchange for retail customers. If it becomes the financial platform also for corporate and corporate debt, maybe. I mean, in the good old times, we had credit ratings, right? Which gave an insight into how probable it was these companies would or would not go bankrupt. They were much less reliable than the Altman Z score, but they were out there, and people obeyed to them. And then once people realized how ridiculous they were, you suddenly had what is called the default swap market, where the banks themselves gave ratings to their counterparties. And so these ratings, these internally build up ratings, became much more important. And Tesla has been AAA rated on that level for a long time, even though, so I'm talking credit ratings here, even though by the rating agencies, they're only low investment grade. So you have sort of a precedent of what happened in the credit rating market, meaning at one moment, the intelligence just decouples, does a better version of what the rating agencies do well, and that becomes the standard, and people do their homework again. Because again, one of the reasons why these damn scores and ratings exist is because people are lazy. They want information densified, and there it is. There is your number. There are your 3 stars. There are your 3 letters. And if that wouldn't happen, the whole gaming system couldn't be in place.
Wow. Okay. So, and I think that last thing that you said, and I know you said it previously in the interview, but I think that's really helping me really get my head wrapped around this. Is that this appears to be another. Maybe the way I'm thinking about it is this appears to be another one of those things where humans are just trying to make things simple, and they're trying to use a number to perhaps highlight companies that people will want to be associated with, not just because of money, but because it's entering a new stage of capitalism, whatever you want to call it, where we have to be much more socially conscious in their head. And so like, well, let's make it easy for us to identify the companies that do a good job with that. And it's born out of that. And now we're in a situation that it can be hijacked to a very high degree because, again, humans trend to corruption the longer and the more people are involved in something, especially when there's a lot of money to be made. So,
and especially if you don't pay a lot for your services, these passive index funds are at the core of the core problem.
Yeah. I'm sad.
Want to take some questions?
Okay.
We're running.
Is there anything else you wanted me to bring up before we do that?
No, I think I went through what I wanted to do. I mean, I want people to understand, I don't think there was an initial very tight little conspiracy table where they put this all in place. But my gosh, how certain events just lined up for this mess to be set up.
Crazy. Absolutely crazy. We'll take some questions now. That was an hour and 20, by the way. An hour and 20 of just like...
Sorry, I was going on and on and on.
No, but I feel like we'll just scratch the surface of it too. Like I feel like there's so much more in there that we need to go through too. But maybe we'll have to do multiple series over time because this is wild. And maybe, hopefully, I mean, my hope with this is that someone, I don't know if I'm going to be able to, I'm going to try my best to try and do this, but like, how can we make this digestible for the masses so that the regular person can understand the different variables that go into this? And this, in the same way that's my hope. And again, it seems shady to me. It seems shady to you. It seems shady to a lot of people, but it's not well understood. So that's my goal, is to try and bring not well understood things to as many people as possible. I think is where I can bring value. So I don't know. And that's why I'm so happy that you decided to come on. I really appreciate you. So if you have a question about what we just talked about, drop a question in the comment section below. Please write question in all caps, so it's easy for me to find the questions in the comment section, because producer wife is not here today, and God help me. So here we go. We're going to start bringing up some questions here, and some of the ones are already, look at this one. A $50 super chat.
There you go. Now you owe me really.
For every dollar that is made from this stream, I will donate to the USA.
I love
swim
it.
team.
Thank you, Farzad.
I think
love that
that's
idea.
something.
Thank you very much.
I think that's a good idea. Yeah.
Thank
so
you.
sunlight is the best disinfectant, of course. Tesla Boomer Mama is our sunshine in more ways than one. But who are making up the sunblocks that are protecting the wrongdoers? This is the best and only way to expose them to beneficial effect. Go Bruins. Thank you, Crunch. Yeah, I mean, this is all how long have you been working on this thing for? Like a month plus, forever.
Yeah, I wanted to be ready, and the thing is, I had pages and pages of notes, but then you try to rephrase it, make it easier. It's so much, and it's so charged, this whole topic. And there we are.
Yeah. Another 11 Canadian dollar super chat. Thank you, Lulu. ESG these nuts. Thank you. And then here's another quite controversial statement, but thank you again for the super chat. Let's just say Elon is identified as a woman. She'll be the richest, strong, independent, single mom. Extra points. All right. Thank you, Lulu, for the $11. Appreciate you.
Yeah, game the gamers. That's it.
Yeah, there you go. I love it. Claudio, Alexandra and Farzad, how likely do you think it is that quotas of all sorts are considered discriminatory and unconstitutional in the United States? How do you think about that?
Yeah, I actually wonder that, right? I do believe this is a topic that will end up in front of the Supreme Court. And I mean, obviously will take a long time. I hope there's a solution before that. I really want these congressional hearings. I mean, my gosh, they have congressional hearings on any and everything. And this one should come up as soon as the November 24 elections are done. I mean, I don't know about you, but don't you feel they ever do anything? I mean, my gosh, there we are. And there's so much lobbying happening as well, right? You can be sure that this gravy train will do everything to stay in place. This subject didn't exist 5 years ago, and today this is billions and billions of dollars spent on actors that didn't know that this whole thing would exist 5 years ago. That's where we are.
I have a feeling that this is going to gain momentum, though. I really am hopeful, because it always starts with a little bit of smoke, and usually where there's smoke, there's fire. And I do think with Twitter's growth specifically, and someone like an Elon Musk that's not happy with this, I think with a big enough megaphone, and like the Valuetainment guys picked it up, and like you said, there were a few newspaper articles that highlighted the story, but they were like kind of at the that sort of Philip Morris 84, Tesla 37 kind of deal, right? Which is a good way to maybe get it started, but it needs to be like an expose. It needs to be a thing like you've done, where you got to sit down and start going through the tiny bits that are going on, and hopefully, who knows, maybe there's somebody out there, like a journalist that's watching this, that's willing to go in and really do so much work to figure out where this is going, and maybe you need to 60 minutes piece,
Yeah, and don't you find it's funny how the media doesn't really want to touch this? When I had last year my video and all that, I approached nearly all of the journalists I have access to. Nobody wanted to do anything about this.
And I wonder how many of them is there a possibility that these guys are just, they don't have a financial incentive to do it because they're somehow, right? There could be a situation.
Sure, these are their friends, of course.
Crazy. That's why FU money is so important in the world, is because you can go out there and do stuff.
There you go.
How can we get more people FU money? This is really the way to do it. All right, question, not ESG related. We'll have a couple ESG ones in deck though. Rather Tesla related. What do you think of the Rostan FSD test ride?
Okay, so this gave me a lot of heartache and headache this weekend, because it's happening in my hometown of Santa Barbara.
It's on Thursday, right?
Yeah, it's on Thursday, and it's actually a whole day, because initially I was supposed to go there and be the judge. And that's a good thing I don't have time. And I said it immediately, I don't have time. This is not just me chickening out, but I didn't want to have also this responsibility of either, giving this credibility, or I didn't want to be associated with it. The thing is, no doubt, I think nothing good about him. I think he has an interest. He now pretends that he doesn't have a corporate interest in it, but I mean, we all know he does with his, what is it called, Green Hill company. Software, the software is actually a platform for all the OEMs to do a lot of things. Obviously not full self-driving, but if full self-driving becomes the standard, and if what I think will happen sooner or later, the same way they now adhere to the supercharger network, they will adhere to the full self-driving software. And it may not all be Tesla's market, but Tesla will be one of the main players in this game. His platform will be redundant, and he can say what he wants. Yes, his platform is not a competitor to FSD, but his platform is becoming redundant if FSD becomes the norm. And so he has an interest in that. He has the engineers in his company to fake this. He has filmed before in Santa Barbara in areas I've never seen. I've lived here for 9 years. I've walked nearly every mountain here, and I can tell you I've never seen where he's doing that. So this is completely off-road, and this is, I have no idea, and I'm sure he optimized the setting to ensure that whatever should work doesn't work there. I also do believe that he uses every possibility in his playbook to cheat, to ensure that there is lights or colors or whatever not happening the way it should be. And I do believe Ross is in no way intellectually or technically equipped to even understand what's happening. So I told that to Ross. He couldn't care less. He told me that no problem, FSD works. He will see that it works. This is all going to be wonderful. And so I was getting really annoyed, and I decided, you know, what the heck, this is not my subject. First of all, it's FSD beta, right? It says it all the way. Let's test it when it is full self-drive. That's how it's sold. Currently, that's not how it's sold. So whatever happens, happens, and then what the heck, and we move on, and maybe we have, because of that, buying opportunity on Friday, or because nobody gives a crap. I mean, he has invited the whole press, Bloomberg, CNBC, everybody's been invited to come with their film crews and whatever. I don't know whether they're coming, but he's making a big hoopla out of it.
Well, okay. So it's going to garner a lot of attention, and then so Ross and Dan are both going to be there, and we'll see what happens.
Exactly.
Okay. All right. We'll see what happens.
And apparently Omar is now coming as well. I don't know whether that's true or not.
Okay. Okay. Here we go. Kathy K. Thank you so much, Kathy. Kathy is the GOAT. What can we actually do to improve ESG situation? Great question.
Talk about it. And if anybody has political influence, bring it to your Congress people. If you know your Congress people, tell them that this is a subject you want discussed. Vote next year in November for the right people. I mean, I'm not saying left or right, but vote people in there that understand this is a subject and that you want them to bring forward a congressional hearing. We just have to talk about it as much as possible. I mean, I can't be the only one carrying this, and on top of it, I'm not an American citizen yet, right? So we just have to really make sure this is on the agenda as much as possible, as boring as it is.
Yeah, thank you for that. Thank you for the question, Kathy. Question, and this is more, I guess, a reinforcement here from Asito. Question: ESG is equity, not equality. Corrupt and failed companies / funds will get the money from uninformed investors. Did I understand that correct?
Yeah, I said all that. I mean, there's both equity and equality in that. So when I use the word equality, it is because the Human Rights Council publishes what is called a corporate equality index. That was sort of an ESG score before the days, and that has become very gender driven. This is mainly now on gender subjects, and so that's why I'm talking about equity. Now, you can't say that it's only a matter for corrupt and failed companies. Not at all. It is a money. It has two objectives. Any company needs an ESG score to get credit, to get money, to raise funds, right, by a bond issuance or by getting credit line from the bank. And asset managers use ESG to force the stock or the bonds they invest in to be ESG rated, right, to just get the whole system working. So you understood half of it correctly, Rasito, but it's a good start.
Yeah. All right, let's do a couple more. Is that okay with you?
Yeah, sure.
Couple
go
more
ahead.
questions. Yeah. Let's see. Let's do this guy. This one's an interesting question. From Ross Coombs. Question: In 2020,
I was like, "Oh my!
How's
what
that
did
doing?"
I do?
Question: In 2020, we had SPACs, which are special acquisitions that happened where they took a bunch. It was basically a way to bypass the IPO process, I guess. Is that
it is? It was a sort of a private placement pre-IPO.
Yeah. In 2020, we had SPACs as a way to raise money. Now we have dodgy ESG ways for bad companies to raise money. Will the capitalist market not just disrupt this trend given enough time?
That's a very good point, and that is a hope I have. You have to know that at the end of 2020, for the year 2020, we had about $17 trillion in ESG funds, and that is down to half of that a year later. Why? Ukraine war, high energy prices, ESG just became more of a budgie subject where people weren't feeling as comfortable about it. So yes, in terms of money allocation, we're already on a good path. But as I explained, they're coming now the government way. They're coming the sustainability standard way and whatever. So if it would be only capital markets, I think we could break it. Just sufficient pressure and people just thinking this is crap, let's get out of it. But since they're coming now the legislative way of putting ESG as a standard in there, that's much more dangerous.
It's basically a mandate. They're trying to mandate the standards more than anything. Okay, that's very helpful to understand. Thank you. From Blue Hound, question: let's assume ESG was supposed to benefit society and our economy. How can it be used to positivity, improve our society and economy? So, is there a way to actually put this to good use?
That's a very good question. Well, the first one is I wouldn't like any central body governing it. I just don't like the idea that there would be a table of people deciding how it has to be defined, calculated, reported. I hate that whole idea of micromanaging. So by itself, the 3 subjects may have validity. They're not for me. I'm not a social warrior, whatever, but that's me. Somebody else may be. So there may be a validity in reporting the 3 topics individually and then let people who are interested in these 3 topics decide, right? So for me, the beginning of the beginning would be to not commingle anymore the 3 topics, because I just believe that, it's like you put 3 juices together, in the end you have no juice anymore, right? It just doesn't make any sense to bring the 3 topics into one score. But that for me would be the minimum first step. No central authority and dividing the 3 subjects.
Okay.
And then anybody reports how they want that.
Yeah. Let's do 2 more. Wait, what? Question: who was pushing the ESG proposals at the Tesla shareholder meetings recently?
Well, there were 2 questions there from the same activists that wanted that oversight. Well, what mining was it for the oversight, far as I remember? There was a question for the cobalt mining or something like that.
Yeah, was it the St. Jude's or not St. Jude's? I forget. Wasn't it like the
sisters of whatever? Yeah. It's always the same. It's last year the same and whatever. It's always the same. This is the same little world turning around, trying to push the agenda. Always.
Yeah. All right. Last question. Bill Stokes. Good. This is a fascinating question here. So without being specific, how does a small investor make money from this? If companies are being stupid, then can I get higher returns by investing in companies that are less stupid?
Yeah, go into Tesla.
Not financial advice.
Never.
Perfect. All right, everybody. Any parting words? Alexandra, this was a thought-provoking conversation as always. An hour and a half plus passed in, and I feel like there's still so much to cover. And like Alexandra has said, I think I do encourage, maybe what everybody needs to do is just we all need to sort of sit down and do our own research on this as well, see what else we can understand about this because of its complexity. But I really appreciate you doing the work. That's I think we're lucky that you have the background that you have and you're willing to put in so much time to research this stuff and bring it to the public. And I'm honored that you chose my platform to bring this stuff forward. And hopefully as we continue to have this conversation, more and more people become aware of this very potential, very big hazard that's coming down the pike here. And, at the very least, in the spirit of sort of where we live now in 2023, I think it's very okay for us to ask tough questions on what's going on. Because I think there is I think folks are very confused about a lot of things lately. And it's important to have open conversations about these matters. So I really, really appreciate you coming on. Any parting words for the audience before we go?
Thanks for having me. And again, please help my swimmers. So don't forget about that. Pinned tweet on my Twitter line, and Farzad is going to put the link under this video as well. Thank you very much. Hope you appreciate it, and we'll come back and talk ESG, right, Farzad? Just going to be there.
Anytime.
Exactly.
Anytime.
You take
All right,
care.
everybody. Let's see if I can
Speak
do this
soon.
well. I'm going to click on
Okay.
brand and do my end screen. Bye, everybody.
Do that.
Thank you so much for
Bye-bye.
tuning in.